A month back or so, this was the poster boy in the markets, and suddenly all of these stocks are applying, strong breaks at hit speed breakers as well. There's a sentiment loss even in the earnings space. There has been some kind of a miss as well, and this all happens at a time when the country's second largest car maker has launched its IPO after almost 3 decades of existence. Your own sense of how are you assessing the auto space at large, both the four-wheelers and the two-wheeler space? We've seen what happened with Bajaj Auto yesterday. Hyundai IPO just sailed through on the back of only QIP sales picking up. Your own sense of how are you assessing the space from here on?
So absolutely. So auto has been a segment where we have also been fairly positive on, across for the last year or so. Our belief has been that incrementally demand has seen a revival. However, if you look at the overall positioning, clearly at this point in time, our preference is for the two-wheeler segment over the passenger vehicle space. And this ties in with our thought process that there is some improvement that is taking place where rural or mass consumption is concerned. If you look at various data points that are coming through, one, of course, the monsoons have been good. Secondly, the impact of the MSP hikes where the Rabi crop goes, as well as expectations of a good impact, good output on Rabi. And also the data points which are coming through from the rural side in terms of employment, etc., seems to suggest that there is some degree of improvement, especially where mass consumption or rural consumption goes. And that kind of ties in with commentary that you're seeing from various consumer companies as well. And this we feel bodes well for the two-wheeler segment, not so much the premium, but more specifically the mass two-wheeler segment. So that's one area that we continue to remain positive on. Now, the overall space, of course, in the last 1 year has done reasonably well and has outperformed, and we are cognizant of valuations to that extent. And therefore, from that perspective, where segments or stocks where valuations have run up ahead now of fundamentals, one would need to be cognizant of the same. However, as I said, that within the two-wheeler space, those companies which are largely present where the mass segments are concerned appear to be well placed. Here again, valuations in pocket continue to remain reasonable, and therefore within the auto pack, we this is our preferred segment where we continue to believe that there is scope for growth to come through. The second aspect where autos are concerned is on the margin front. We believe that with commodity costs remaining largely under control, margins should hold up, and as growth picks up, some amount of that operating leverage should also play through, and therefore that should support margins. But yes, again, within the pack, I must put in a caveat that our preference at this point in time is for two-wheelers over the passenger vehicle segment. We'll also have to wait and see how the festive demand really plays out. Within the passenger vehicle segment, of course, there are reports which have come through of inventory buildup in the system or some amount of the discounting that is taking place, and therefore the completion of the festive season and the demand flow through is also something that will be of importance where the entire pack goes.